Hi there, this is Simon, personal finance coach. On Saturday, May 4th, 2024, Warren Buffett, Chairman and CEO of Berkshire Hathaway, held his annual shareholder meeting with some 30,000 shareholders in attendance. After Charlie Munger's passing, Berkshire's Vice Chairman, Greg Abel, and Ajit Jain took his place and sat next to Buffett to answer questions from the stage at the annual meeting, making a significant shift in Berkshire's leadership. Here are the top key takeaways from Berkshire's annual meeting. In the interim, however, please subscribe to this channel for future updates. Berkshire's Q1 operating earnings gained 39% year over year, and cash balance hit a record $189 billion. Buffett sees Berkshire operating earnings grow modestly in 2024 and assumes that the cash pile will grow to $200 billion by mid of this year. Buffett expressed earlier that he prefers to measure Berkshire's performance based on operating earnings rather than on net income, which he considers useless as a financial metric. The main reason being that operating earnings provide a clearer picture of core business, excluding fluctuations in the value of the investment portfolio. Buffett expects Vice Chairman Greg Abel, who is planned to succeed Buffett as CEO, be in charge of stock investing decisions in the event of Buffett stepping down. This offers a much-wanted clarity on Buffett's succession plan. Buffett will turn 94 in August, and he did make a note of his advanced age at the meeting. There had been questions among investors about who would control Berkshire's common stock portfolio. Buffett expressed his trust in chosen successor, indicating confidence in his abilities to allocate capital. He understands business extremely well, and if you understand business, you understand common stocks, he said. Berkshire reduced the size of its stake in Apple by more than 22% in the first quarter of 2024. Berkshire's capital allocation process is based in large part on understanding consumer behavior and the role of good businesses in creating value for investors, Buffett said. Buffett said he has no clue how the iPhone itself works, but he does know what it means to people. He said he thinks that Apple is one of the great products, maybe the greatest of all times. Buffett expressed confidence that Apple will likely be the largest common stock holding in Berkshire's common stock portfolio unless something dramatically happens and changes capital allocation strategy. Berkshire is one of Apple's biggest shareholders, and similarly, Apple constitutes the biggest holding of the Berkshire's portfolio. About 75% of Berkshire's equity investments are concentrated in 5 companies, including Apple, American Express, Bank of America, Coca-Cola, and Chevron. Buffett said he felt extremely good about Berkshire's stake in Japan's 5 leading trading companies. He was referring to Berkshire acquiring 5% in 2020 passive stakes in each of the 5 Japan's trading companies: Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo. Buffett clarified that further investments in other countries were unlikely and that Berkshire will be American-oriented in terms of investments. If we do something really big, it's extremely likely it will be in the United States, he said. Buffett had some cautious words regarding the potential of AI in scamming people. He was referring to AI voice cloning, facial cloning, and deepfake technology that scammers use to create manipulating videos for the purpose of extorting money out of people. Buffett said he does not understand artificial intelligence, although he thinks it has enormous potential for both good and harm. Referring to AI use in Berkshire businesses, he said, "They will figure it out. We got smart people." Global cyber insurance industry is a huge business, but it might be associated with huge losses. This was the statement from Ajit Jain, who is in charge of Berkshire's insurance businesses. Berkshire tries to be very, very careful, he said, when it comes to taking on cybersecurity insurance liabilities, as it is hard to know the quantum of losses that can be subject to a single occurrence and the aggregation of cyber losses. He added that there is not enough data to be able to determine the true cost of losses. These are the main takeaways. Please subscribe to this channel for future video updates, and thank you for watching.